Okay, one fine day you switch on consumption and you can buy all companies, all stocks. So maybe FMCG is one segment which has seen last 2 years of downgrades only. That's a place to start. I'm not saying it's seeing it, but that's a good place to start. Urban discretionary in terms of retail, not the value retail, but value retail has done well. But the discretionary, urban discretionary, that retail segment which has been seeing a slowdown consistently, except one company actually. So that's another place to kind of look very, very closely. But the point I'm trying to make is it's not one tide will lift all boats. The tide will come in different waves. It's so you have to try and see which is off first. Even in power, for example, that happened. First the coal-based utilities went up, then the capital goods went up, then the renewables went up. So it will always follow in waves. Even in bank, BFSI, that is happening. The large banks are the ones which are holding steady. I mean, the NBFCs and smaller banks would follow.
On the contrary, I saw in your portfolio you have cut stakes in some of the larger banks and picked up 2-3 of the smaller NBFCs and banks. I think RBL you have bought L&T Finance, you've cut HDFC Axis Bank. So what is your call? Is there sort of a churn? And that's also seems to be a industry-wide trend that everybody is cutting exposure to the larger private sector banks. And going into smaller names. What's your take? What is the earnings outlook for the next 18 months looking like?
So I think the bigger banks, the issue is that while the valuation was supportive, that one leg of re-rating has happened. So as I mentioned, it's always a question of probability in buy side. Now the probability of a significant upside has reduced in some banks. So you will... in your portfolio, you have to size it accordingly. If you have a 8-9% weightage, if you're bringing it down to 7-7.5%, that's still being
not significant,
positive.
You're saying.
But that's something which you would do and you should do from a risk management perspective. As far as the smaller banks are concerned and NBFCs are concerned, those are right now more bottom up, where we think the valuation was absolutely cheap, or we think the growth is very good. You will only buy either of these two candidates. And that's what we have been doing. Right now, the wave has not really come to the smaller banks where you could blindly buy any smaller bank or buy PSU banks. It's not a widespread kind of a wave which is there today in BFSI, but it is definitely something which is begun. And as it continues, you have to keep finding more and more opportunities for alpha.
Right.
Ultimately the objective is to find alpha when we are doing some of these changes. And as I also mentioned, there are funds which will take higher risk. There are funds which will not take the risk. So some of the names you mentioned, I will hold it in a business cycle fund, but may not hold it in balanced advantage fund.
Right.
Because I'm trying to create more aggressive alpha there, where the risk reward is high. So you also have to see what that portfolio demands or what that category demands in terms of investor expectations.